Hey folks, Dan Frio here, the rate update with today's special guest. I can't believe I got him. My man, Jeb, we were just talking behind the scenes. I reached out to him and I gave him, I apologized behind the scenes to him, but I'll apologize on live. I reached out to Jeb probably about a year and a half, maybe it might be 2 years ago. He didn't know who I was. I didn't know he was. I was very new to YouTube, and he was one of the first people kind enough to reply back saying, hey, what do you, so we talked once, and then it was so busy. I didn't get back to him like 2 or 3 times that I was supposed to. And then I was embarrassed, and I didn't want to call him back because I'm like, he probably hates me at this point. So I love your videos. I truly do. Thanks for being on here. It's a pleasure to have you on here. So
no, I appreciate it, Dan. Dude, no need to apologize, man.
I've seen your channel grow and grow and grow, and I'm glad to see people like you successful because I think we both feel this way. There's a lot of misinformation out there to click you through and do whatever else, and then you watch that information, and it's like, what's going on? So you just had a few videos that I wanted to just talk to you about, but if you would just tell everybody about you. Here's the wild thing is, and I'm transparent. When I said I was having you on my show, I don't know how many people emailed me and chatted on the last one I just did an hour ago. They're like, hey, I follow both you guys. Hey, I follow him. So it's a pleasure to have you.
No, dude, I appreciate it, man. I think you were kind of leading to say, maybe introduce myself a little bit. So I'm a real estate agent, real estate broker here in Southern California. Started a YouTube channel years ago, just kind of providing evergreen content. The pandemic happened. There was a lot going on, a lot of misinformation, quite frankly. And I had more time on my hands at the beginning of the pandemic because real estate wasn't deemed essential to start with. And so started making videos talking about the housing market. Stuff kind of took off. I was one of the very few people out there basically saying that the market wasn't going to fall apart. And I'm still here 2 years later saying the same thing. So it's not to pat myself on the back. I've been wrong about rates. I've been wrong about some other things. But the idea, again, with the channel is to provide information. So buyers, sellers, loan up, whoever just can make rational decisions, not fear-based stuff, which is what the headlines really want you to, kind of grab your attention and want to spread, quite frankly.
Yeah. You just did a couple of videos, and that's why I actually reached out to you. You were talking in one case about foreclosures, another one about the recession, something about rates. And the nice thing is, and I told you this behind the scenes, your thumbnails and your titles are pretty catchy, but the biggest thing that still intrigues me, when you go into the context, you provide the facts instead of, oh, the world's going to end. Rates, remember 6-8 months ago, if rates hit 4%, all bets off on housing. Well, right. Now they're teetering 6%. And yet it's slowing down. But that's basically one of the reasons why I wanted to reach out to you is I have a whole laundry list of stuff to ask you.
Let's address the thumbnail thing real quick, because I was told a long time ago, when I first did my videos, if you go back and look at my channel, the thumbnails suck, quite frankly.
Yeah.
But it's not clickbait per se if you address the thumbnail and or the title in your video. If you either confirm it and or deny it, you've essentially done what your job is as a content creator or as a real estate agent or what have you. So yeah, some of the thumbnails, many of them are very fear-based by looking at them because that's what gets people to click.
Sure.
But very early on in the video, I think I pretty much lay out how I feel about housing and then try to provide it with some data and then boots on the ground and all that good stuff.
You nail it. And that's why I started following you back when, because you're a realist. And, I'm sure I tick off a lot of people because I just try to, say, okay, when they come back and say, oh, rates are going to hit 12.
Right.
No, why? What's the fundamentals behind it? And I always ask that. The other thing that really gets me into a pickle with some people is like, okay, well, the housing market is way too inflated. Rents are way too high. Okay, well, where do you live? That's my thing is, how do you dissect, okay, if you're going to rent? You just did a video. I was watching, I think it was today or yesterday, of, the rents in your area are just astronomical, right?
Yeah. I mean, in fact, I'm actually doing a video. I'm going to film it today after this. It's going to be released sometime next week, but it's the idea of renting versus waiting, or the idea of buying versus renting rather. And I'm going to give some real life examples. I'm going to take a property that I have right now. What does it cost to buy that property right now? Like, what would your payment be? And what would it be to rent that property, and compare them? Let's look at a 2 to 3 year time horizon, looking at some different scenarios and see. And it's not me here telling you you need to buy a home. It's here laying out the things that nobody is talking about when thinking about rental property. I mean, renting a property or buying a property. Everybody, I say it all the time. Too many people right now are worried about the value of their home tomorrow.
Right.
It drives me absolutely insane, because nobody, prior to 2 to 3 years ago, that was never the idea. Nobody ever bought the house with worrying about the value tomorrow. Now, some people did, but the stories that I like to tell are the parents, the grandparents that I'm now selling their house, the boomers who are aging out or downsizing or moving to something smaller, single level or whatever. The story I always get is, I bought my house for X amount, say 19,000 or 20,000 or whatever number you want to plug in there. It was a lot less than values are today. And the next thing they say is, I had no idea how I was going to make that payment. Yeah. They often say it like, it was the scariest day of my life. I bought that house and I had no idea. I thought I was buying at the peak. I didn't think housing could go up anymore. Right. And not only has it gone up from where they bought it, it's gone up considerably from where they bought it. And, people want to comment on videos and other things saying, well, what goes up must come down. And I'm like, no, your grandparents bought a house at $20,000. It's now worth $1.5 million. It didn't go down. The rents in the 60s were $75. The median rent today is $1,100. It didn't go down. Right. Yeah, there's fluctuations in this stuff, but prices are sticky to the upside. And so it's just how people look at things. And there's just too many people out there, again, spreading the fear, pushing on buttons to get people to not act for one reason or another. And I'm not saying you need to go buy a house. You need to know the facts so that you can make the right decisions.
Got it. And again, that's why I reached out to you, because and I'm not a proponent. Everybody needs to own a house. They don't.
Right. No, it's not for everyone.
You hit it right on the point. I heard you in a video the other day. You basically said, I said the same thing, is if you don't plan on staying at that house 3, 4, 5 years, don't buy. No, because the closing costs alone are thousands of dollars. It doesn't matter if you get a streamlined or whatever. The closing costs are still there. The realtor commissions are still there. The mortgage piece of the puzzle, the deeds and everything are still there. That if that's your goal, put it in some stocks or something. I don't know, but you can't think of getting money. Am I going to be up 20% next year? It's not the way to look at housing. And that's why I try to explain, and that's what you try to explain.
Yeah, no, the idea of creating this overnight success, becoming a millionaire overnight. It's in our culture now, just because it has spread, and it's fun. It's a great way to think. And there's people that have been able to, buy Bitcoin at, $100 and it's now worth 50,000 or whatever, 30 or whatever the number is. And so that's the way people look at everything, and it's housing and it's everything related to it. And it's not reality. And so you've got to buy when it's the right time for you, and that might be many different reasons.
Well, you had a video you just posted that you hit it on the nail on this one too, is the biggest thing behind the scenes on a lot of this stuff is no longer, or you'd be able to validate this. When you have a bid on a home, you probably you just said you had one listed. You finally took it off the market because you had 20 something contracts on it or offers. You could have got 40 or 50. It's kind of insane. But now I talked to some realtors on the East Coast and so forth, and it appears you're having the same things. Now, instead of having 30, 40, 50 bids on the house, you might be down to 8, 10, 12. That's even escalated. Well, you tell it. On a normal market, let's go back 5 years. How many bids would you normally have on a home?
I mean, sometimes it was 1 or 2. Maybe you were the only one. I mean, that a normal market. I mean, we haven't seen what is considered quote unquote normal in some period of time, right? Housing has kind of been on the incline since 2012. So prices have continued to go up. from that point, and they've moderated some and what have you. And then obviously we've had the pandemic, which accelerated things. But, prior to the pandemic, you might be the only offer on a house, or you might be one of two offers, and that was normal. Now, going through the pandemic, it accelerated, right? It was 20, 30. I mean, I wrote an offer on a property that had 67 offers. I mean, I even did a poll on my channel, or asked the question. Somebody told me they had seen something 150, and I mean, crazy numbers on property. So the idea at the moment, I mean, I can tell you firsthand, the market is slowing. I can see it.
Same here.
Yeah. I mean, I've got two properties on the market right now that 4 months ago would have had multiple offers, and I have no offers on either of them. Okay. And I'm not worried. I'm not scared. I'm not like, oh God, it's not going to sell. It's just the market has calmed down a little bit, and my clients thought their house was still nicer than the one that sold 2 months ago and wanted to price it on the high side. And that's okay. But the market's changing and it's shifting a little bit. And the seller was told that, hey, listen, we're doing this, but I think we should be less aggressive on the price. And they got their way, and we listed it high, and now we're sitting a little bit, and it's doing what I thought. And so with that slowness, yeah, you might not see 20 offers on a property. Now you might see 2 or 3 on a house that is super desirable and priced right. And I think the priced right part is the key in this whole thing. There's a lot of sellers out there that still think it is the same market. It is not the same market as 3 to 6 months ago. It's not. In some markets, it is still, the demand is still there. Supply is still low. I mean, I'm in a market where supply is still low. Orange County as a whole here in Southern California, I think as of yesterday, we had about 2,700 homes on the market. Prior to the pandemic, the average between 2017 and 2019 was like 6,500 homes. So between 2017 and 2019, it was still a good seller's market. It was still, I mean, it was more balanced, but it was still a seller's market. And we had, 155% more active inventory at that time. So yeah, inventory at the moment is higher than it was this time last year, but it's no way a stalling market. But I do think things are going to shift a little bit. I had a mastermind this morning. I'm going to talk about this in more on a video, but I network with a lot of top agents across the country.
Cool.
And this morning, a lot of the similar conversations, people saying, listen, property's sitting a little bit longer. It's not, it's turning more into a professionals market on the real estate side, and sellers need to be more fair in how they price things.
Yeah. And again, that's why I reached out to you, because you have the dead nut, your comments, your videos are right on point. And again, it's the facts behind everything. You're not out there just throwing stuff against the wall, hoping it sticks, hoping you get clicks. I tested this not too long ago. I created a thumbnail, just was like, the world's ending. And, I put a rate up there at 8 point something, because that's how much
get clicks, buddy.
Dude, it was crazy. And then it's like, then you start getting bashed for that. And it's like, I just was trying to prove a point. Then when you put up there, you're smiling and it's a good day in the markets and everything, you get, 100
clicks. Nobody wants to hear that. Yeah, nobody wants to see that.
So I'll get to the point. One of the best things one of the reasons why I wanted to ask you, well, you just hit a lot of it just now, is I was going to ask you how your supply was, the demand, days on market. Are you seeing price reductions? All the stuff that would basically signal. I'm trying to explain. And I did a in-depth video not too long ago explaining how this is nothing like 2008. It's a whole different complex. It's a whole different dynamic and everything else. I mean, you might disagree. You might agree.
No, I agree entirely. Okay. I mean, I've talked about it so many times, I don't care to talk about it anymore, that this isn't 2008. And we can talk about that in another time, because again, you've probably beat it to death as well as I have. But to answer the question that you posed a minute ago, have I seen price reductions? Yeah. I mean, I've actually 2 listings that I have at the moment did price reductions on both of them yesterday. Okay.
But you also said though, too, you felt, and I hope, the listing person, your client isn't watching, maybe not, but
we can have this because that is a conversation I have. I mean, I don't, again, I am pretty transparent with regards to everything. And so when I have a conversation with a seller and they say, hey, listen, I want to price at X, if I don't believe in that price, I'm going to tell them. And I'll tell you when I'm wrong. I mean, there were multiple properties that were listed during the pandemic that, I mean, I'll give you two examples. One, I priced at 2.3, and I'm sorry, I priced it at 2.6. My suggestion was 2.3. The client wanted to price it at 2.6. It sold at 2.6. I was wrong. The same client. This is the same client. Wanted to list her mom. She referred me to her mom. Her mom, and I was dealing with the daughter again in this case, wanted to price the house at 2.7. I told him, probably worth 2.5. But listen, you were right on the last one.
Yeah.
Let's do it again. And it sold for 2.8. So I mean, I was wrong on some of these that I priced them too low, but I can tell you at the moment, I'm telling clients, listen, you cannot underprice a home, but you can overprice one.
Yeah.
So let's go back and look at where prices were 2 months ago and start pricing that way versus trying to price, okay, the last comp sold at $1 million. Let's price this one at $1.05 million. That is not, I mean, unless you have a unique property or in a unique area that has demand and there's absolutely no inventory, you can probably still do that. I still think the right approach is to price it fair and just let the market do its thing.
Yeah, especially if you get 100 bids on the darn thing. I was watching a show the other night, YouTube show, as a realtor on there, and she was laughing, which I don't blame her. She's like, I finally had a client that was they wanted a house so bad. The house was, they bid 100,000 over asking. Well, out in California, that's nothing. But in this particular case, the house was listed at 200. So they paid 300 for that house.
I mean, I'm not surprised. I mean, I wish I could say I was surprised. I'm not surprised.
Yeah.
I mean, I've seen multiple properties sell 25, 30% over the asking. So to hear something say it sold 50% over, I mean, okay, sure. I mean, that's the world that we were in, but that's not going to be the case going forward. And I want to be clear. I don't expect a crash. I am not a crash believer. I don't think you're going to see a decline on prices. Quite frankly, I think you just see more sideways movement. Homes, areas that have more inventory are going to see more price reductions, are going to see things moderate more than others. If you're in a market, Southern California, for example, it's going to moderate less just because we don't have the overbuilding. We don't have all of the other things out there. But if you look, I mean, the recent stat today came out on new home sales. And then you look at the numbers and it's like, I forget the number of completions versus the starts. It's so low. It's ridiculous.
Yeah, it's so skewed. Like the starts are up here and the finishes are down here.
It's like, come on, that's not even a real number to use, but it draws a lot of headlines.
Yeah, because
it gets attention to, hey, listen, nobody's buying new construction. Well, that's great, but nobody's finishing new construction either. So let's
the amazing part we get a lot of new construction, and the reason being is that the here's the builder, and then you have their lender, who's usually owned by 49% by the builder in a lot of cases. They won't lock in the clients until like 45 days prior to close. And I just did a video earlier. Rates, the 15-year rate is up 87% from where we were on January 1st. So that's how much rates have gone up. So in your market, how interest rate sensitive are a lot of the clients? Because when you're talking a $2-point-something million home, either they're really loaded or a 1 or 2 or 3% increase in rate can put that payment up another $2,000.
Oh yeah, it's big. I don't know. I think all of us are a little surprised that the market hasn't stalled more than it has with the increase in rates that have taken place. Going from high 2s to mid 5s on a lot of programs. For a lot of people out there, it's like a 42% increase in payment. Doesn't matter if you're $300,000 purchase price or $1 million, it's 42% in payment.
A lot.
And that's a lot. And so I feel like the people that are affected because if you're in, the people that are affected the most are going to be the lower end buyers, in my opinion. The first time home buyers in a lot of ways, because a lot of times they don't have the equity from selling a property to go into the next property. Whereas the person that's selling the property and going up in price point might have additional money they didn't want to put down, but now they're willing to do it just to keep the payment low.
Right.
And you have those people that are kind of, maybe they were moving up in price and now they just decide, you know what, I'm going to stay at this price and or move to less expensive real estate so they can actually go down. The people at the bottom can't go anywhere, right? They just have to stop buying to some extent. But you do need the first-time home buyers in the market to be able to have a good market, if you will, because you need the first-time home buyers to be able to buy those entry-level homes that moves those people that own those up to the move-up buyers, and then it continues to move, up the chain, if you will. So I feel like it's the people at the lower side that get affected the most. Now I'm in Orange County, so I'm in what I'll say a bubble, but I don't mean a bubble in the aspect that people want to think of it. I'm in a bubble in the sense that there's a lot of money here.
Yeah.
A lot of corporations, a lot of wealth, a lot of multi-millionaires. And so we're still seeing cash purchases. We're still seeing purchases with huge down payments. So it affects those people less than it does the person putting 3.5% down or 5% down, just because they're financing more. Therefore, that rise in rates is going to have a bigger impact on their payment.
Yeah, I mean, I missed it too. I was on the side of like the Fed. I kept saying you can play videos back when, and I'll admit it. I thought that inflation was going to be transitory. I thought that the supply chain would work its way out of the system. People would be forced to go back to work in the workforce because they just ran out of money. And the forbearances, and I'll repeat what I've been saying for the past year, their forbearances, when they ended, my assumption was going to be, well, if you're still having a hard time, you would sell the house. Well, I was wrong. And so what's happening is, here's what I'm seeing on my side, is we're having people now calling in, and they maybe want to do a cash out refinance or whatever, that they got, and we turn them down because they're like, well, I got modified by the lender. I'm at 2.8 on a 40-year term.
Yeah, you can't mess with that.
You can't even rent. You can't even find a rental payment. So why would you sell that house? So where I missed the ball, and I'll admit it right here, is, back in 2008, when everything started, the shit hit the fan, the lenders weren't doing anything. They're just like, hey, send in your paperwork and we'll sit on it for 6 months. Now they're doing everything proactively as they can. And then you had this run up in values that a lot of people are just okay there. And then I did also a study trying to explain a lot of this stuff, that in 2021, the U.S. Consumer had the most disposable income ever in history. Which it's kind of like an oxymoron when you look at it and you're like, okay, we're in a pandemic, the world's shut down, nobody's working and nobody's doing anything, but we all have more money than we've ever had in our lives. So, and again, you're like you were saying, you're kind of in a bubble because your homes are way escalated. Like here in Illinois, I'm in right outside of Chicago. I bought my house 22 years ago. It just peaked over what I paid for it back there.
Oh,
I kid you not.
Interesting.
Our taxes are crazy. Everything is nuts here. So, I'll talk to people in California. Our biggest business is California. Texas is building like crazy. We offer like extended locks and everything like that, and Florida. But in Illinois, it's a mass exodus. So I wanted to talk to you because I'm trying to I talk to people on the East Coast, in the middle, and hopefully I can use you from now on, just giving a take on the market. What are you seeing to kind of, and if the market's crashing, say the market's crashing. I mean, that's all I want to hear is just the facts. On my side of the equation, I try to give as much data to say, guys, we still have a supply problem. And you just hit it on the button when you said, completions are down here and everything else is up here. I honestly never knew there were so many people building homes. And the toughest thing there is the contracts are so bad, meaning the builder in the contracts, I read about 10 of them. The norm is, well, we could take a year or longer to build. If there's any price increases, we pass those on to you. And then when we're ready to close, you better close. Otherwise, we're going to be charging you $200 a day. I have people that's basically been on hold for 6-8 months that were supposed to be closed 6-8 months ago. And the bad thing is, I just did I don't even know if I can pop it up. Here, let me make you sick to death for 1 second. And I'm not going to keep this on the screen, but here's that little thing on rates I did. So here's where rates started the year. Here's where rates are now.
Yep.
That's the increase.
I mean, yeah,
I mean, nuts.
I'm not surprised at all. I'm looking over here at the other screen.
So the people are frustrated because they're like, what can I do?
Nothing.
Yeah, I know.
That's the problem. You can't do anything. And that's the frustrating part. I mean, we talk about the supply issue, that, what have you. And, depending on what you read and all of that, right? They say on average, the builders need to build about 500,000 more homes per year than they're currently building for 10 straight years in order to meet the current demand. And that demand, people wonder where it's coming from. It's millennials turning prime buying age and a lot of that, right? Which we can talk about in detail if you want. Yeah. But what I like to point out at the moment is that if we're going into a recession, which the indicators are pretty high that we will, is that the very first people that put things on hold, that pause, that say, I'm not doing anything more, are builders. And so if you go into a recession, rates, obviously we can talk about what rates do and historically and all of that good stuff. But if builders stop building, that only adds to the supply issue.
Right.
And so you're just prolonging a problem, and it is a problem. And it's a problem that, quite frankly, I don't know how you solve. And it definitely has its rewards for those who own property, and it has, consequences for those that don't. And the pandemic accelerated that. There's definitely a gap in wealth, and I think that the pandemic accelerated that. The people that owned equities, that owned housing, that owned fixed hard assets fared pretty well.
Yeah.
Those that didn't, the gap got wider. And I don't know how you solve that problem. And so, my goal again with the channel isn't to tell you to buy a house. It's, hey, listen, if you're considering buying a house, these are all the things you need to consider. Right. And if it makes sense to you, then you do it. And if it doesn't, then that doesn't mean you'll never be able to own a house. It just means you need to put the steps in place to be able to do that at some point in the future.
Yeah. You're right on. And that's again, the whole gist of my channel was I've been following you for years. And that's why I reached out to you a couple of years ago, because I'm like, you just tell the facts. And I like talking to you because you're boots on the ground. You even mentioned that. I'm boots on the ground. I'm behind the glass, wall, I guess, but we're seeing it here too. I never fathomed rates would go from 3 to 6 in 90 days.
I don't think anybody did. I mean, obviously the people that were pessimistic on the market calling a crash, that is what they want to see, because it kind of, helps them feed the idea that they're trying to come across. But the reality is rates at 6%, to me, I don't think the Fed can keep them there. I'll say that. Now, that doesn't mean they need to go down tomorrow. I just don't think that this is something they can continue to do. I don't think they have the chutzpah, if you will, to continue to hike rates in this environment, but we'll see. I mean, there's no good solution for the Fed, regardless, because if they stop, inflation gets out of control. If they don't, and rates come down, it fuels the housing market again, and there's more problems. So I don't know what the right answer is.
What's your gas out there?
Gas? Over 6. I have electric. So I went electric like 4 months ago, right before it went. Yeah, I was like, I'm not doing this anymore. And let's be honest, I didn't go. I'm not one of the people out there that said, I'm going electric, I'm going to save money.
Yeah.
Because listen, the cost has gone in other places, insurance, and I went from no car payment. Now I have a car payment. So it's like, I'm not saving money, but I got a new car and it's fun and all of that. So so, be realistic as to why you're doing it. You're not really saving a lot of money at the end of the day, but
And I've been watching, I don't know if you ever watched TED Talks.
Oh yeah.
I think it's TED Talks. They had 2 big discussions on the electric vehicles, and I'm all for, if we could save the planet or whatever, cool, but don't crash the world in the meantime. But they're like, hybrids are the way to go. So
no, I mean, hey, listen, I got it because it's fun, and hey, that's what I wanted to do. So
if you don't mind, let's answer. You kind of drilled down just on our conversation a whole bunch of the stuff that I wanted to talk about. So if you don't mind, let's open this up. I know you got a filming to do.
Sure. Yeah, let's
answer a couple of questions, and I'll let you run. But again, I can't thank you enough for being here. Prices are up globally. Is there a housing shortage globally? Are the millennials in very country buying houses? They're out of my wheelhouse. You know anything about
I don't
other
know if
countries?
globally it's a problem with regards to shortage. I know markets like if you look at house prices relative to other countries, Australia, Canada, UK, we are, we have a long way to go before we're, reaching the prices of those countries. So globally, we're well below where other countries are. Now, I don't know what drives the prices in those markets. I think Canada, for example, is that the population of Canada is primarily focused in two major cities, Toronto and Vancouver. Okay. And in those markets, I think there's a lack of housing, which is part of the problem in creating that demand, or the demand and the lack of housing in those markets. And that's why prices have accelerated so much, is because, again, you're in these markets where they really can't build anymore. It's all high rises and what have you. Outside of Canada, I don't really know, what's happening in those markets. Do you follow Barry Habib? I'm assuming you can to some extent, right? And you've seen the generational chart that he uses with regards to ages and home builders. And so if you go back and so the millennial, or when people say millennials are turning prime buying age, that means that they're turning 33 years old, because typically that's the time of your life when you become a home buyer. That's what they've figured out over time, is that 33 years old. Well, if you go back and you look at housing 33 years ago, if you will, with regards to what they were building at that time, 33 years from, say, now, supply in home construction was way down. They were building far less homes. And so that is the result right now of part of the reason that we have even less homes on the market now, not considering what they did post-pandemic or post-housing crash of 08 when they put all these restrictions on home builders or whatever. But if you go back to like 06, 07, and you went back 33 years prior to that, on that generational chart, you saw less people being born, and at that time, that would be prime buying age at the time of 2006. And so less people being born in 2000 that would turn prime buying age in 2006. But if you go look at the chart in 2006, construction was at an all-time high. So you had less millennials turning prime buying age, construction at an all-time high. And then you had the meltdown of the crisis and all that stuff, which just created this massive amount of supply. And that's why they put these restrictions and whatever else. And that's the reason that we're sitting in this position today, is because of all of these restrictions that were put on home builders post-pandemic. And a lot of these home builders, quite frankly, probably being terrified to overbuild again because of what they went through. So there's a lot playing into that. But there's some really good charts out there that show what I said in a lot better detail than what I just went through, that kind of lay it out in easy to understand graphs.
It's crazy. As you're talking, I'm picturing the articles in my head, because I think a lot of times when I'm watching your channel, I'm doing the same research on the other end, and it's like, that's why I was like, heck, I'll just reach out to him. And so that's why I did. So I'll answer. Let's go through a couple more, and then, like, I know you got to run, so maybe 5 more.
It's all good, brother.
If you guys have a question, go ahead and post it. Jeb would be more than happy to answer it, but he's got to leave here shortly because he's got videos to do. Hello, love you guys. What are the rates riding last week or so? So let me explain. I greatly appreciate you guys watching. One of the things that's for people that usually follow my channel, I know we probably have a lot of Jeb's folks here, is mortgage rates. There is no such thing as like the 30-year fixed rate today is 5.2. Okay, let me just explain this to you as quickly as I can. When it comes to mortgage rates, what happens is let's just say there's a baseline rate. Let's say it's 5%. I'm just throwing that out there. But now what affects theirs? If I ever showed you a rate sheet, it's pages long. Okay, what affects the rates? Why? And that's why I can't exactly give you a quote. And I'd love to give you a quote. Just email me or whatever. But your credit score is huge in regards to your rate. So if you're at a 620 or 740, your rate could be a point different, if not more. Okay. How much money you're going to put down? What's called your loan to value. It's your loan amount divided by the value of the house. Believe it or not, the type of home also is relevant. Is it a single family, a 2-flat, a 4-flat, so forth? So there's a whole slew of things in regards to that. But, so if you would, soothing sounds for soul, if you would email me, and Jeb, I hope you don't mind, I'll just put this down.
Oh, no, you're good. You're good.
Email address, it's on here somewhere. You can just email me, please, and I'll be more than happy. Just give me your, what you're looking at, the loan amount, the house's value, your credit score. I'll get back with you probably within 10, 15 minutes with something. So thanks for the comment. But if you guys have anything for Jeb, please ask. What happens to the 50-point rate hike just put out by Fed last meeting? So let me explain what the Fed does. The Federal Reserve basically controls what's called the federal funds rate. It is nothing. Basically, with the federal funds rate, the definition or how it works is at the end of the day, all banks, major banks, have to have so much in reserves. Okay, so let's say, for example, Citibank has to have $1 billion in reserves, but they don't. Okay, so what they do is they reach out to Wells Fargo and say, "Hey guys, I need an extra $1 billion to cover my reserves," or they're insolvent. Well, the rate that they're charged is what's called the federal funds rate. Usually that rate, though, trickles down through the economy to credit cards and car loans and everything else. But mortgage rates are completely different. Mortgage rates are controlled by what's called the mortgage-backed securities market. It's a bond that trades on Wall Street that we follow every day, all day. I have 3 screens going on here. So if you check out my channel every morning, I bring out and I say, here's where rates are. Here's what the MBS market is doing. And then I always like to put in the why. Why are they doing what they're doing? Because what drives me nuts is when somebody says, "Oh, rates are going up." I want to know why. Right. Okay, so that's why I try to do all my research and present it to you guys, not in any biased form, but just like Jeb says, just give you the facts.
And sometimes you don't have the right answer. Sometimes you don't know why. Sometimes the markets are irrational. Like, why did it go up?
Like yesterday, the market was up 600, the stock market. I said to one of the guys, I should start trimming down some things because I'm watching everything just go like this. Right. And what happened today? It opened down 400. So there's so much out there. And the bad thing is most times the markets overshoot. Yep. Okay. And I can, I'd like your feedback on, and I think we talked about it a little bit. I don't think rates could go much higher. I mean, we've spiked up. We've almost doubled the rate. On average, rates went up 75 to 80% in the last 90 days. It can't be self-sustained. Okay.
No, I agree. I feel like part of my belief, again, my belief, no one else's, is that the reason you saw rates go up so quickly, so much so quickly, is because of the fear of the unknown. What's the Fed going to do? Are they going to act? Are they not going to act? What's happening with the balance sheet? Are they going to let it run off? If they let it run off, how much are they going to let it run off? And all of these questions, right? And so when the Fed comes out and in March or whatever, and they say, "Hey, we hike it a 25 basis point hike," and then within a week after coming out, they come out and say, inflation's out of control. Yeah. We need to, raise it 50% or 50 basis points at the next Fed funds meeting, when they just had the opportunity to do it at that meeting, sent fears through the market, in my opinion. And people are like, whoa, what's the Fed doing? Do they even know what's going on here? I mean, the inflation's at 7.5% at that time. What are they doing? And coming out after the fact, acknowledging something we all knew was a problem to start with. And so I think that fear is built into rates at the moment. I think as the Fed starts to do and follow the plan that I believe is built into equities to some extent, I believe it's built into rates to some extent, I think you see rates pull back. But again, it's just a guessing game. I mean, the spread between the 10-year and the 30-year fixed rate at the moment is trading the highest that we've seen in a long time. Yeah. Yep. 2.3, 2.4%, when on average it trades like 1.75% above the 10-year. And so if that were the case and the 10-year today was at just over 3, you should have rates still in the high 4s pretty much across the board, but you don't. You got rates in the mid to high 5s, depending on where you are. So I don't know. The saying, the markets can remain irrational longer than you can stay solvent. you replace the word solvent with whatever you want at the end, but the markets can remain irrational longer than any of us think otherwise in either direction.
Right.
And so I think you just got to make sure you're making the right decisions for you and stop speculating. If you get into contract, lock your rate, move on. Don't just watch it every day and say, well, yeah, if I would have waited, I could have gotten an 8% or a 1/4% lower. Who cares? Lock it, move on. If you're comfortable with the payment, who cares
You'd
what
be
the rate is tomorrow?
amazed by we have a lock-in shop, and we have a lock-in shop and an extended lock. The extended lock for people building, that's where I was like, honestly, I didn't know this many people were building homes. We have a database this big. It's like everybody's, because they're like the builders are giving them incentives, you know, $5,000, $6,000, $8,000, but they're like, well, if the rate goes up to 8, which I don't think it'll go up, I can't buy the house anyways. No, so that's where a lot of that comes in. But I remember the federal meeting you're talking about. The federal chairman Powell came out and they increased rates a quarter. It wasn't 48 hours, and Bollinger came out and said, well, we should have done 75. And the markets just went poof.
Yep.
The stock market plummeted. And then every time they come out and say something, within 48 hours, somebody's contradicting. Part of the Fed is contradicting what they just did. So it's like, come on, guys, and I agree with you. It's all the perception on what things are going to happen. So I'll fly through these if you don't mind, because I know you got to go, and I didn't want to keep you on here all day. So I apologize.
No, we're good. We're good.
Let's see. And thanks for both of your work. First time homebuyers in Miami, Florida. Awesome experience.
Awful experience.
Awful.
Not awesome. So sorry, Tiana. Yeah.
I'd love to know if we can be of any help at all for you. You know, is it a mortgage thing? Is it a finding a house thing or whatever? So Tiana, if you'd like to email me, I'm more than happy to answer. And I personally will email you back. I promise you.
Yep. There you go.
What's the next one? Nico has my loan disclosures. Cool. So we are helping that person.
Awesome.
Jeb, what percentage of homes are selling or cash in that decline?
The last couple homes I've sold, I don't know how many I've sold this year. I don't know, maybe 12, 15 so far. I don't know that I've had any cash offers that we've accepted. I've had multiple cash offers, but in some of these scenarios, the loan was the better deal because it was a higher price or whatever the reason was that we chose. So I haven't done a lot of cash, but I know there's a lot of cash out there because I'm seeing it. I'm competing against it when writing offers for buyers and being told, hey, listen, we accepted a cash offer. So it's out there. Is it declining? I don't know if it's declining. It's hard to say. I mean, the thing about cash is that rates don't affect the cash. So if you've got the cash, you're still sitting in as strong a position, if not stronger, than you were a couple of months ago, because now you have options. Now you have less competition. You got time on your side now. So I don't know. I think cash in this market is still king. It will always be king. But I think I don't know that there's less of it. The latest existing home sales report, I believe, said 27%. I'm quoting this up at the top of my head. I don't know 100%, but 27%, I believe, of the offers last in April were cash. So 1/4 of them. And I think that's
crazy. I didn't realize it was that high.
Yeah, that's about in line with what it is. When you're talking here, I'll look it up just to see if that's.
Is that a national average, or is that your neck of the woods?
No, that's National Association of Realtors. So yeah, I'll look it up here as it comes up. So
got it. I'm going to read the next one and I'll start.
Go for it. Yep.
Will home prices level off? I'm trying to purchase an investment property. The majority of the homes priced won't allow me to cash flow. I agree. I did a video the other day while you're looking that up on why so many investors are still buying properties, especially cash. And I did an analysis, and it's easy. I hate to say that. It's easy to get a 15% ROI on your money if you buy the house for cash, especially in this market, because you know how much rents are going up just as fast as house values, 18, 15, 18, 20% a year. So you get into the property, you pay cash, even if your rate's 6, 7, 8, 9, 10%, you're still cash flowing that. Well, if you don't buy, something crazy.
No, agreed.
Did you look it up? Is it still?
I did. It was all cash, accounted for 26% of transactions in April, and that was down from 28% in March.
Holy shit.
And then this time last year, April of 2021 was 25%. So it's actually higher than it was a year ago, but less than it was in March.
Got it.
If that helps.
If stocks continue to tumble further, will the investments look safer than haven and bonds? Historically, mortgage rates have crashed in every recession. If stocks continue to tumble further.
Yes, I agree with the mortgage mind. That would be my consensus, my thought. I mean, if you go back again and look historically, what happens when the Fed starts hiking the Fed funds rate, inflation gets tamed, interest rates come down. I don't think that this is any different than that. I think that's what will happen here. Very hard to say that it will, because just, I mean, again, it's irrational what's happening out there with some of this stuff at the moment, and why rates should have pulled back by now with some of the stuff that's come out, but we haven't seen it. So
yeah, and the tough thing is with the stock market, you know, yesterday when it was up 600, we had a nice rally in the MBS market. Again today, I think the MBSs are up like 50 or something. So I think we're finally getting some correlation or correction in the market.
Stabilization would be really good.
Yeah, seriously.
I mean, honestly, I know, Dan, you'll say differently, and that's okay, because your business is built on interest rates. But
yeah,
interest rates moving sideways for a period of time, not going up, not going down, is actually a good thing for housing.
It's I love it. I love it.
And then it allows, again, it allows supply to build. Maybe it gets some sellers off the fence that would be sellers and start buying property. I think that's, again, a good thing. And remember, the only people that are affected per se with higher rates are the people that were buyers prior to rates going up. If you just started buying the home a home today, if you just went through the pre-approval process today, you don't know what a 3% rate was, because you weren't in the market.
It's gone.
It's gone.
It's gone.
And so
I can't buy Bitcoin at a penny.
Exactly. And so who cares what it was then?
Right.
This is what it is now. Can I afford a house now based on this? If the answer is yes, then you're not necessarily affected by that affordability shift that's happened. Yeah. Now, there are still a lot of people out there that didn't buy for one reason or another, and they are affected with that rise in rates. And so that's a whole different animal. But there are always new buyers coming into the market. But I think that sideways movement, again, just allows stabilization, and stabilization is a good thing. I'm saying that I'm a real estate agent. I'm a real estate agent, and I'm saying it's okay for higher interest rates for a period of time. And I say that with the idea that I think rates at some point in the future will come down. Now, will they be 2.5% again? I don't know. But I think they'll definitely be in the 4s, at some point in the future.
People keep asking me, when are we going to be back in the 3s? I'm like, well, look at history. When have we ever hit in the 3s on a 30-year? Once, right. Maybe?
Yeah.
And it was basically when the world was shut down. So, if we get back to that scenario, that means something else is really bad. Okay.
No, agreed.
Is the best way I can put that. Let's see. Dennis O'Brien. I think Dennis the other day, he was on a channel or a video that I was doing, and he mentioned he shorted the bond market and made a bunch of money. So I didn't even
congrats, Dennis. That's awesome.
Will house prices level off? I'm trying to buy an investment property. Majority of prices, we just did that. I'm going to fly through these because I know you got to go.
No, yeah, you're good.
Hearing about non-QM investors. Have you had experience in investors where non-QM loans for 50 LTV, seller second for 40 LTV, and buyer puts 10% down? No, I can check on that for you. Are you seeing, you probably in your neck of the woods are you seeing DSCR programs? And I don't mean to put you on the spot. Do you know?
No, not really. I mean, I haven't come across any personally. I've seen the question asked more on my lives that we do on Wednesday more recently than I have in the past. Yeah. So yeah, that people are definitely out there thinking about them, but I haven't seen any personally.
Yeah, I would have, Joey, if you want to email me, I can check and see what it's called, the CLTV, the combined loan to value. I don't think anybody's going to go to 90 combined LTV. You can get most likely 80 for sure. So if you would reach out to me, I'd love to help. Next one, if so, crazy the day, I can email me. I'd love to help you. Nice. Thank you. Thank you. Thank you.
Thank you, Michael.
I don't have a moderator. Do you usually have a moderator when you're doing your channel?
I do. It helps, man. Yeah. I mean, I was fortunate enough to have somebody come on my channel early on and ask. Actually, no, she was always on the channel, always there every week. And I finally just said, hey, listen, do you want to moderate? Like, I realize it's not sexy and you don't get anything. I'm not paying you to do it, but if you're here anyway, you want to do it. And she did. And she's awesome and helped out, tremendously. And the crazy thing is she actually bought a house like probably 3 or 4 months ago, and she still shows up every week and does it. So
that's awesome.
yeah,
I usually have a couple people that are they're like groupies, which is kind of cool.
No, those are the people you count on, man. Those are the people that you let moderate.
Here's my biggest fear, honestly, is coming on here. You probably have it too. Well, you have more people than me, but coming on here, and it's like you look over and there's nothing. It's like, oh crap.
You know, I mean, again, you're providing value. People will show up, man. Yeah. It's good stuff.
Florida Panhandle, need to refinance. But I currently have an FHA at 5. Can't seem to get anywhere with brokers. Seems like they want me to touch they really don't want me to. If you would, email me. I'd love to help you. Here's one of the things. I'll just say it while Jeb's on here. For those out there, the one thing I just thought about this today. If you have a loan right now that you took out and you have PMI, please call your lender, because you probably have built enough equity in the last year. Now, I'm saying if you bought your house a year or more, call your current lender if you have a conventional loan. See if they would remove the PMI for you, or at least do an analysis of it, because you could probably save $200-300 a month by just doing that alone. Don't refinance. Just get the PMI removed. But yeah, I'd love to at least look at your situation and see if we can help you out with that FHA loan.
Yeah, and if you got an FHA loan that's at 5%, you know, and you've got the MI on top of that, you're at 5.85.
Yeah,
basically that's your monthly rate, if you will, or your rate with the MI factored in. So if you can get something in the high 4s, I mean, it might make sense to consider that.
Hey, whenever you want to get in the mortgage business, you let me know.
I was in it, dude. You knew that?
I didn't know that.
Oh yeah, I owned a mortgage company for over 10 years. So
I didn't know that.
Yeah, so I am very familiar with financing, which is I think one of the pluses I have as an agent is that I do understand loans, and can talk to them. And I just let my license expire actually not that long ago, but yeah. But anyway, that's a whole.
That's you, because every time I talk to you though, or email, you get it. And that's because a lot of realtors, I hate to say that, and I won't just stereotype, but they have the one house that they're selling because they call you every 3-4 times a day wanting status. And it's like, guys, I get paid like you. When the house sells, I get a paycheck. That's the only time
our goal is to get to the finish line, baby.
Could rates go back to possible?
Sure. Possible. Yeah, absolutely.
Not a bad thing. Yeah. And the last one, and we're going to go from here. 8-day mortgage separate from everything.
I'm reading that last question there. Yeah. Hey guys, something to remember. Again, I'm not a political person by any sense of the word. In fact, I hate politics. I think they're all scumbags. But with that being said, it's a voting year, my friends.
I was just going to
say things will get interesting as it starts getting closer to that time, right? People gotta look good for votes. So
you got to throw that.
I don't know what that means.
Yeah, you got to throw the carrot out there for people to chase.
But there's an announcement of like first-time home buyer programs and all this crap that'll never come to fruition. Just remember, it's all a ploy.
Student loan stuff.
It's all.
What else is going to come?
And I don't care which side you're on. They both.
Yeah, I agree with you. They're all. It's a rat race. I always say it this way. I hope they get in for the well-being of all of us. Then they get there and it becomes a boys' club that they know they can't win, so they just join and keep just go with the status quo.
Sure, absolutely.
So I'm going to let you run, buddy. This was
so that last question. Let's look at that last question real quick because I just wanted to see if I could answer it.
I'm sorry.
Why would an agent list a HUD home on Zillow with a case number, but not on HUD Home Store? I'm looking at HUD home in a very nice neighborhood, home prices in upper 300s, but listed for $150,000. So I'm not sure why, with HUD Home Store and some of those, again, you got to I don't do HUD housing here in California. So I'm not super familiar with it, but a lot of that stuff is syndicated from one spot. So if it is a HUD house, HUD Home Store is probably responsible for syndicating anything that meets HUD guidelines to their website is what I would think. And therefore that's the reason it doesn't show up, and or that agent just put it as a listing on Zillow without putting it into a place where it would feed to others. I can't say for sure. But typically speaking, anything that's related to HUD or whatever, HUD is aware if it has a case number and should be posting it on any sites that have to do with HUD. So I can't say yay or nay, but it might not be the agent in that case, or maybe it could be.
Got it.
No idea.
perfect way to end. You
Yeah.
you hit it out of the ballpark like usual. So, dude, I publicly announce I apologize to you because I blew you off about 1.5 years ago or 2 years ago. So my bad.
You're all good, buddy.
It was awesome having you.
I appreciate
I'd love
you having
to do
me,
this
man.
again if you're okay with that. I'll reach out to you, I promise. But God bless you. Take care, and thank you for everything, buddy.
All right, guys.
And I'll have Jeb's information down below if you want to. If you're out in California and you need some help, please call him or email him.
Yeah.
I'll have all his
description. Just come by and say hi.
All right, man. Thanks again. Take it easy. I'll see you guys soon. Bye-bye.